Hi, this is Zach Meir with the Bulletin Board Heroes here at Zach's Traders Cafe for Wednesday, the 23rd of April, which apparently is St. George's Day. Fine day to have a celebration. Starting with the FTSE 100, and here we've got a block from that resistance line there from March, which I was just drawing on the slide. 85.50 was what we were looking for above the 200-day line, currently around 83.30, and we're not too far away, helped by Ukraine peace hopes. Hopefully we'll get up to that level, even if we then fail after that, helped by the recent break of the RSI resistance line there, which was quite a decent early bird warning, actually, around, near at least 8100 at the highest, and we're 350 points above that now. We're now also with a second signal with the RSI above neutral 50, just under 55, so as I said, up to the 50-day line, and then we can take a view at that point, because obviously that a break of that resistance line there from last month would then suggest we're very much back in bull mode. The other point to note is the way that the 200-day line is rising again, and hopefully we would have that to build extra momentum for this market. On the downside, not expecting anything lower now than the 200-day moving average. Obviously, the worst case is we have to head back to the top channel floor at 82.20, but now that seems less likely. Moving on to the DAX, which actually, to be fair, even though there was a lot of toing and froing after breaking that resistance line there from the end of March, around 21,100, has actually delivered on the upside for that trend line break. And the resistance now, the 200-day, the 50-day moving average rather, at 22,200. RSI in the low 50s, so that is just exactly where we would like it to be for an ongoing push to the upside. Worst case at the moment is we're to test the 21,000 area again. But as I said, with the gap higher that we've had, things looking rather better. And in fact, if you look closely, this is a bear trap island reversal, so we gapped down back at the beginning of the month, and then gapped up, in fact gapped up twice, so that's quite a U-turn for the DAX. On to the Dow, where the Telegraph was suggesting it was doom and gloom and disaster on Monday, which is obviously very satisfying given that it hasn't been. Here we've had a gap close buy signal from the move down on Monday, basically put in a higher low there around 38,000, and that was effectively the June to August support area for this market, so that has come into play, and above that gap there around 38,900, looking for a return to that triple failure area at 40,800, even if the market then pulls back after that. At the moment, according to the spread bettors, we've got the Dow at 39,800, so not too far away, or maybe a couple of days away from testing that 40,800 zone. Moving on to Bitcoin, where it's the dollar part of the equation here, which is the big one. Dollar weakening by the second, and we were literally looking for 90,000, above 90,000. I said there wasn't really much on the chart between 90 and 100, and so that's hopefully where we'll end up, perhaps by the end of this month. Big picture target maybe for the end of next month, if everything goes well, up to 120,000, which is the top of that rising trend channel from back in March last year. Worst case at the moment, a test of the 200-day line near 88,000. Moving along to gold, where the situation with the markets looking better means gold has sort of fallen back. We had 34.30, and the top of that, or that resistance line there from back in October, is the best case scenario target, 34.30, and obviously we overshot that. We were potentially looking for an acceleration to the upside. That may still happen, but we might have to test the old resistance there, that red resistance line there around 32.30, and the floor of that sharper rising trend channel shown in black from back last month. If we can get that, or get this market to stay above the 32.30 zone, then we could still be on for a best case scenario target 3800, maybe by the end of next month or going into June. But the rug rather pulled there for the bulls in the short time, and we were always concerned that there was bearish divergence, rather higher highs over the last few days, but lower RSI trace. Moving on to pound dollar, which is irresistible now, given the lay of the land. The only problem here is that we've had so far a bull trap through 133 and the top of that falling trend channel from back in 2021. So we basically need an end of day close, or at least a weekly close above the 133 level to signal that we could push back up to the $1.40 area. On the downside, not expecting less now than 132, which was the initial April resistance, but with the change in the fate of the dollar, maybe one has to be a little bit more cautious and wary of a potential ongoing bull trap. Moving on to the stocks and starting off with Coinsilium, which has had a few weeks at least, or a couple of months rather, in the on the back foot, but looks as though the share's bouncing off a rising 200-day moving average there, around 2.7 pence, and while we hold above recent support around 2.5 pence, looking for at least a partial retracement of the rally that we had up to 4.6 pence at the turn of the year. If you're cautious, you wait for an end of day close through the 50-day line at 3 pence. Onto a stock where there's been a few honourable mentions online amongst the Twitterati, or Xarty I suppose you call them now, but the Twitterati who actually know what they're talking about. We had the break of 0.4 pence last week. Above that we're looking for 0.8, which is obviously the top of the range, but perhaps people are looking for rather more than that. Going into a potential golden cross there over the next couple of sessions, so 0.8 looks pretty well nailed on, especially while on the right side of 0.5, the old July resistance for this market. One of the best situations of the recent past, and obviously there have been quite a few, has been Catenai, where we identified the floor of that rising trend channel base around 0.15. Probably the most accurate, inadvertently, the most accurate call there, because that really was the low of the move. So above 0.15, we were looking for 0.32, and then we were looking for 0.45. We weren't looking for yesterday's high or today's high around 0.87, as that was a very, very quick move and off the scale in terms of what we were thinking at that time yesterday. But the current situation is that we've got this market hitting that resistance line there from back in October 23, and at the moment, that 0.8, 0.9 area, it looks like the peak for the shares. Ideally, though, they stay above the 0.5 on the right side of the 0.5 area for a retest of 0.8 to 0.9 over the next few weeks. You can see the main resistance there on the way down was around the low 80s. Moving along to a stock which has one of the lowest market caps around, Ethernity Networks. You can see that we're on around 100 grand market cap, but today's results were very well received. We've broken through recent neckline resistance of 0.037. Above that, looking for not only the retest of the 50-day line, which we've already achieved, but best case would be up to 0.09 pence, the top of that broadening triangle base. Although obviously one has to take the situation with a pinch of salt, given the lay of the land. On to one of the other recent star situations that we've had, and Capai is next. Here you can see that we gapped through resistance around the 0.06 level. We've had various targets there. The big one there, I think 0.19, which is quite memorable, and then the final one that we've had, the recent one, 0.36. Above 0.36, looking for we have been looking for a potential move up to 0.66. So far, the best has been around 0.6, so nobody's perfect there, but hopefully we'll get there while we're above, or at least on the right side of 0.5 pence, which has been recent broken resistance. I tweeted out about Fragrant Prosperity yesterday, having initially been looking for 0.84 or so, which was actually before I published the tweet. In the meantime, the shares obviously roared even higher. Best case scenario target here around 1.4 pence, and you can see so far, not too far away, 1.27 has been the peak so far, but still looking for 1.4 while we are above the recent resistance around the 0.8 to 0.9 pence area. The other point to note is that the 50 and 200-day lines are rising, so we're going to a golden cross, which is obviously the strongest part of the cycle and has proved to be. On to Metals One, which took a bit of a breather after being one of another star call here at Xtract Traders Cafe. Bounced off the 50-day line there quite nicely at 10.8 pence and above that. I suppose we're looking for a previous target we had there around 20 pence. And hopefully we'll get that by the end of next month or even sooner. You can see another of the previous targets there near 15 pence is being touched at the moment. But the gap close buy signal around 4 pence and obviously the support line rebound that was around 2 pence have been star signals for this situation. Moving on to Vast, where the shares have behaved like clockwork. The initial impetus for the buy call here was around 0.1 pence, with the CEO putting in 500,000 euros, interest-free from memory. And obviously since then we bounced at and above the 50-day line. The initial target there was 0.22, second target there 0.3, and final target was up to 0.45 or 0.46. I think we've just got up to the 0.45.5 level, 0.55, but not quite hit that line because that line keeps rising. And if one ignores somebody trying to throw cold water on the recent rally with a cry of a potential fundraise, while we're above the old June resistance there at 0.39, still looking for 0.46, 0.47, and the shares to basically retest spring 2024 resistance between 0.45 and 0.4 and 0.5, but as I said, need to hold that sort of 0.39 area in the meantime. Finishing off with Xtract, which also seems to be revitalizing at the moment. Here we bounced above both the 50 and 200-day lines after gapping up higher in March, so that shows that the recovery here is still very much in place and looking for 1.3 pence at the top of that broadening triangle from the beginning of last year. Hopefully by the end of next month. Ideally, we stay above that 50-day line at 0.74. That's it from me today. More updates tomorrow.